In this video, I'm going to show you some simple to use trading rules for selecting and trading high probability trade setups. Hi, I'm Larry Gaines, founder of PowerCycleTrading.com, where I teach other traders how to trade directionally using options. So in this video, I'm going to show you some simple rules that you can use for directional trading, and this example will be on Costco for a long trade. So if you look at Costco right here, the things I like to look at first is you want to trade in direction of the overall major moving averages. So this is a daily chart time frame. Okay, so the daily time frame is what I like to use for what we call a swing trade, those trades that can last a day or longer, maybe a week to 2 weeks. But the first thing I want to do is I want to trade in the direction of the 50 simple moving average. So you can see my pointer tool right here, and this green solid line is a 50 simple moving average, and you can see the slope of it is to the upside. So I want to trade in this case to the direction to the upside. It's sloping up, and I want to trade in the direction above that 50 simple moving average. So that's step one. Now step two is you want to trade also, you want price to be above the major moving averages. So this is again using a daily time frame. So when we look at a long trade setup, in this example Costco, I want price to be above the major key moving averages, which will be one, the 50 simple moving average, the 200-day moving average, which is way down below, you can't see it, and then I like to use two major exponential moving averages. This dash red line is the 8 exponential and the 21 period exponential, so on the daily. So when price is above that, then I look for a long. I'm not going to go looking for a short. So above these key moving averages, I look for a long. Step three is I like to look for moving average crosses. That shows good solid price momentum. So I like to use two different moving average cross setups. So you can see this orange arrow right here. That is signaling that there's a 5 period crossing the 13 period exponential moving average. Okay, 5 crossing the 13. And then the other moving average cross I like is this 8 crossing the 21. So you can see the red dash line crossing that yellow. So this provides momentum from those moving average crosses. And these numbers, when you look at 5 and 13, 8 and 21, those are based on Fibonacci levels or Fibonacci numbers as well. Step four is I want to be above key Fibonacci levels. So if you are taking a long, I look for a swing high to low. So here's my major prior swing high on the 9th of September to the swing low right here on the 10th or 3rd of October. Now I want to be at least above the 382 retracement for a long, so it's above the 382, and then our next targets will be the 50% retracement, 618. We start getting above that 618 and holding, then it's going to usually high probability to go back to the prior high. So that's for a long trade setup, and I look at the opposite for a short trade setup. Now step five is I want price patterns or price action that's fairly tight. So you can see here at Costco, see these price ranges, they're fairly tight. They're not really wide and loose. So you can see it's consolidating sideways, churning. So I like that pattern for potential breakout up or down. And then again, we're going to use the moving averages, moving average crosses to give us direction. Now I also like to use momentum indicators. I'm not showing any on this video, but I do also like to use momentum indicators. So those moving averages, the slope, and that tight pattern, you can see once it breaks, then it has potential to trend. Now step six is I like to, once you do have a break to the upside or downside, to track trend, I like to use this 8 exponential moving average. So you can see my arrow right here. So that dash red line is the 8. So once you get a nice, that's a short-term exponential moving average on the daily, this is a great way to track trend. So you can see how it exploded up here and then came back and held that 8 EMA and then finally broke. So that's a really good, and over here you can see back in July how it tracked that 8 EMA. So that's a really good moving average. I call it kind of an automated trend line. So as long as price holds that, you just stay with the trade. Once it starts breaking, then that could be a shift or a cycle reversal to the other way. Hope this helps, and I'll talk to you on my next video update.